Hey, hello and good morning, everybody. Hi, my name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. And today is Friday, ladies and gentlemen, the 25th of July, 2025. Still, yes. This show is going to be the weekly wrap-up, basically what happened this week. And we had a few interesting activities happening this week. So we had tariffs, we had the trade deals done, we had the ECB, we had a few economic data sets here and there, maybe not the most significant ones, but from the most recent, we had the sparring between the two heads. The head of the country, US, and the head of the Federal Reserve. Now that was an interesting piece of show, but of course, let's see how the market takes that in. Look, ladies and gentlemen, stay tuned. This show will start in a few seconds, so hey, I'm hoping that you're going to stay around, and hey, let's dig into the markets. All right, ladies and gentlemen, hello and good morning. Hello, my name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Friday, ladies and gentlemen. Friday the 25th of July 2025. Yes, I'm happy to welcome you to this last trading day of this week. And also, if we're trying to find some sort of like interesting fact about this day, well, it's the last Friday of July. So, hey, next week we're only going to have up until Thursday. So, yep, this is the last Friday of July. So I want to welcome you. Probably you're all happy to, finish off the week already. I mean, okay, we still have, one working day to go, but actually it depends where you are, which location you are. Because if you're in Asia, well, congratulations, you have already finished the day, probably, almost the working day. Look. Almost getting there, of course. Not finished yet, but getting there. Look, we're going to talk markets, okay? The usual stuff. We're going to pick up on a few economic things that are happening this week. And this week was, again, another interesting one. And yesterday's kind of communication between the two heads, the head of the US of A and the head of the Federal Reserve. I mean, that was like just a good show. I mean, good material for a lot of talk shows and a lot of late night evening shows, basically. Look, okay, first of all, before we jump into the action, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm just going to put my usual good morning in the chat room. Good morning, everyone. Just a second here. There we go. Good morning, everyone, ladies and gentlemen. Yep. So yes, feel free to comment, feel free to drop your messages as well. I mean, look, this is an interactive show. It's not like a one-man show here. If you're attending, you're more than welcome to ask questions, or maybe just kind of put your own view out there. Yeah, look. It's all just as long as it's appropriate, so there we go. Also, before we jump any further, a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. And also, this little show that I'm going to be doing on the 31st of July, on Thursday next week, the last trading day, the last day of July. Basically, tune in. First of all, register, of course, and then tune in. The show is going to be about different sectors that could potentially benefit during a stock market kind of reversal. Of course, somebody might say, but hey, Darius, we're at the all-time highs and we're still projecting higher levels. Yes, whatever comes up must come down eventually. So, it's always better to be prepared, right? So yeah, we'll look into all that. So hey, I'm looking forward to seeing you there. You'll find the link in the description of this video below. Excuse me. So yeah, I'm, like I said, looking forward to seeing you there, ladies and gentlemen. Nikkei 225. After a very nice rally here, a very good move here to the upside, we almost went to this 42,483 territory. Look at this, and today we saw a little bit of a retracement back down. Nice little shooting star moment here, and now it's kind of, like I said, it's retracing back down. We broke my area here, key resistance area, between the 40,280 and 40,620. Look, roughly, it's never the exact level, it's always the area. So this area was a good area of resistance. We broke it. This came with the deal between the US and Japan. Japan got a 15% tariff. According to the US president, US goods did not get any tariffs on top of them, and also Japan invested like crazy 500, well, at least committed to do that. They committed to invest 550 billion into the US economy, or basically just purchasing that for that amount of, you know, US goods. I mean, that is just like insane, honestly. But anyway, look, they know what they're doing, hopefully. Yeah, for now, it was a good result here for Nikkei. Nikkei exploded to the upside, traveled higher. Hey, let me just find actually maybe a chart with more data. I think I won't have much data here. That's the one. That's what I'm looking for. So let me just change the chart first of all. Of course, candles here. You know, it's a line chart, right? Okay, just a second. Let me just Nikkei 225. Let's have a look. This is the stock average. Bunch of other brokers which I do not want to use, to be honest. So Japan 225. Let's find another one. There we go. There we go. That's the one. That's what I was looking for. The trading view chart. So this is Nikkei, and this is the kind of the one that has like the most data here. And what I wanted to show you basically that, look, Nikkei is approaching the all-time high again. So the current all-time high sits around here, somewhere around this 42,000 kind of 400 and well, roughly around 42,000, kind of almost 500, maybe we can say that. Let me just adjust this. These are not my colors. So this is where we're going right now, and this is what the market is watching. If Nikkei is going to hit a new all-time high, look, everything is still possible. I mean, since we have data here from 1949. I mean, look, I mean, this is just, like I said, crazy. And we have surpassed this level, which was the 1989 all-time high. We surpassed it back in, let me just double check. Let me just actually drop this here. We surpassed it back in February of 2024. So last year I was running a show with a different show, and I was talking about this one, and basically we cleared it, and then, you know, it was a new all-time high back in July of 2024, basically like exactly a year ago. We did go and create a new all-time high. So if we're following some sort of symbolism in a way, then we're still in January, we're still in July, but this time 2025. So hey, can we go and create an all-time high here for Japan, Japanese Nikkei 225? It would be really fantastic to see that, to be honest. It would be fascinating to see that because, again, we did that last year in July. We hit the new all-time high. We came very close this month again in July. We still have 4 days left, just in case. If anybody at Nikkei is listening, you know, or Nikkei bulls are listening, you still have four days left to go and hit that new all-time high. That would be just perfect symbolism, like I said. And then you hit that again in July. It seems like summer is when the bulls are kind of are feeling the best, and then yeah, we could see a reversal back down later on. But for now, again, I'm watching next week. Next week, by the way, let me just jump in very quickly into the economic calendar. Let's see if something can drive the Japanese Nikkei here, just purely from the Japanese economic data. Well, we have the BOJ Japanese government bond purchases on Monday. Wednesday, Tuesday, not much. Wednesday again, not much. Thursday, right? Okay, Thursday we interest rate decision. Yes, this is the one. So let's see if the BOJ has enough steam to drive the stock market all the way to the all-time high. But again, also another thing is that what's interesting, that this BOJ interest rate decision, and let me just confirm that with another source here, that I think we're expecting. No, we're not expecting. It seems like we're not expecting any hikes, any action this time. I think that they will keep the interest rate the same at plus 0.5%. But again, let's confirm that next week, because something might change here, because we know that this week they had they had elections during the last weekend, and the new government came. Not the new government, but the current government lost some seats. And basically, that's kind of pushing a little bit of pressure on the BOJ, because the new party is more in favor of cuts rather than hikes, and this is what the BOJ continued to wanting to do. They wanted to do those hikes. So we're in this, like I said, we're in this tricky moment right now, and let's see if this is gonna drive the stock market higher. So we'll monitor the activity. Let's say, for example, if on Monday, Tuesday we see some sort of like a little bit more of a retracement here, back down, and maybe we'll consider this as a bullish flag. Like I said, it would be fascinating to see Nikkei traveling towards the new all-time high by the end of July, or during the last day of July. Doesn't matter, but still hitting a new all-time high in July of 2025. Because again, like I said, just going purely from the symbolism kind of moment here, and then we could reverse back down. Let's jump into China. China 50. So after we had a great touch of this 14,196 territory right here, we drifted back down. This is what I talked about on Wednesday. On Monday, I said I'm aiming for this area. There we go. Boom, fantastic hit. Managed to do that wonderfully. Now the question is, can we see a rebound? Can we see a rebound from, let me just adjust this arrow. Can we see a rebound from this upside line again? Because, although the upside line is a little bit on the tentative side, still it somehow is doing the job, or should I say the area near that upside line is doing the job. If you're not comfortable with this idea of waiting for a possible rebound here from this upside line, then what you can do here is basically just kind of wait for a pop-up of the 14,200 zone. This way, more buyers could join in. Look, next month, we're getting the PBOC interest rate decision. We know that they have not done anything this time, so we're getting the PBOC interest rate decision. And at the moment, I think the forecast in there as well is that they're not going to do any cuts or any hikes or anything. But look, in general, with the hikes, I think it's not the moment right now. So it's more of a cutting period right now. But still we need some clarity. But like I said, either way, from the technical perspective, I'm watching this 14,200 zone. If we get a nice clearance of that one, I'm going to go higher. For the downside, I'm going to wait for a drop below the 13,800 zone. Again, this was my barrier for the upside. Now, if we do drop below that area, I'm going to start leaning towards the downside. However, although I like it, I have to, I think, reiterate something here. Just let me show. This is what you do basically. This is what you kind of come across all the time. You know, you're thinking that about one idea, but sometimes, you know, clearing the chart can actually help a little bit more. Look, I'll say it this way: the safer option probably would be to wait for a drop below the 13,700, roughly around here, and this way, yes, we could see a moment here for the bears. You know, we could see a forthcoming low getting confirmed. At the same time, we could see a break of the 50-day EMA, and then more sellers could join in. So long story short, for now, this is the thing that I'm watching here. A drop below the 13,700 here is something that I am kind of willing to consider. But again, look, I'm not saying that I'm not going to start looking at some lower levels earlier. I will probably, like I said, keep an eye on this upside line taken from the low, the 7th of April. If that gets cleared, I will slowly start shifting my attention to some lower levels. The U.S. Index, the U.S. Dow Jones Industrial Average. There we go. So yesterday, I was kind of hoping to see a new all-time high, but hey, that's fine. Maybe we're waiting for something, you know, some sort of a catalyst. Maybe we're gonna stall right now. Maybe we're gonna move sideways right now. And what I'm saying is that maybe we're gonna wait for these guys, for the Federal Reserve. Look, these guys are coming out with an interest rate decision on the 30th of July, and at the moment, the forecast is that they're going to keep the rates unchanged, and to be honest, I think so. I think that I think Jerome Powell now doesn't have anything to lose, apart from his own dignity or like a reputation. Because look, okay, I'm saying, you know, that he's saint or something like that. No, it's just that judging from, you know, what you see on the screen. It seems like, you know, he kind of has this, he has the cool, and he has the reputation, and this is good, and he has a lot of things to lose. Like I said, the Fed, if the Fed loses reputation under all this pressure that, you know, it's getting right now, then in a way that's kind of the last resort for the market. You know, the hope dies the last. Well, the Fed is the market's hope. If the Fed kind of gets, if the Fed bows down to the U.S. government, look, then I think we could see some issues. Look, again, I'm not saying that the Fed is the most respectable kind of jurisdiction out there. You know, it still consists of basically of top banks, you know, dictating the rules here for the Fed. You know, and it's not an independent in a way body. It's representing, you know, it's representing banks, top U.S. banks. So that's why, like I said, it still has its flaws, but in this little battle, again, like I said, the Fed has the upper hand in my opinion, and it should stay with that. You know, it should stay with that kind of, it should stay with that position that is at what it stays right now with, which it stays right now with. So look, long story short, let me just kind of probably stop mumbling here and just apply it to real life. If suddenly the Fed goes and cuts rates during July meeting, I think the market might take it negatively. I don't think that it would be a very positive thing. I think that the market would take it negatively, because the market would think that, you know, the Fed bowed down. So normally you would say, you know, a cut of the interest rates would be a positive thing. However, this is a specific situation, and it's kind of like I said, it's kind of an issue here, and we know that they're gonna do the cut in September. Well, at least according to the CME Fed Watch tool right now, they're gonna do a cut in September. Of course, a lot of opponents are saying, so why the hell you need to wait until September if you can do it now? You know, so there's no issue here. Well, look. What can I say? Where's that? U.S. inflation. U.S. inflation. Let me just CPI, if I can find it this way, is Consumer Price Index. Yeah, I think it's this way. No, wait. US inflation this way maybe? No. Wait, US CPI. CPI median, Fed Cleveland. Right, okay, no, this is not the one that I'm looking at. Wait, just a second. I will find you the one that I'm referring to. And when was the last? I think it was on Thursday that we got the US CPIs, or was it Wednesday that we got the US core PPI? And Tuesday, sorry, Tuesday is the 15th probably, right? We got the US CPI. There we go. I'm looking for this chart on TradingView. I need to remember how the abbreviation here goes. USIRYY. Okay, that's the one that I'm looking at. So basically, this is what I'm looking at here. This is the headline, US headline CPI year-on-year number. Look, I said it several times, multiple times, let me just get back into the chart. I said it multiple times that this looks, from the technical perspective, if you're analyzing this chart from, like I said, with the help of technical analysis, then to me this looks bullish. To me this looks bullish, and basically it looks something like, we have something like this, like a falling channel here, where the current CPI is kind of playing around. Now, whenever we have like a clear drop, this is, like I said, this little idea is something of my own. And because normally you would say, the prevailing trend was to the downside, we're in a falling channel, then you should break out lower because the prevailing trend was to the downside. Well, not in this case. It's a bit of a different logic here, where basically we whenever we have a strong decline like this and then a gradual decline, then you get a pop higher. So this is, but again, this is just an idea, this is just a theory, it's not a rule, but in general, yes, what I've seen in the past. So basically, if we start popping above that 3 level, now this is where the interesting bit comes in. So if we start pushing above the 3% target here, 3% level, well, this, like I said, this opens the door to some higher areas here, in my opinion, and we could see this one maybe traveling to the 4, maybe 5 level here, and this is where the Fed would need to start hiking rates. Of course, it would be a little bit unpopular with the White House, because they don't want to see hikes, but that's if you have monetary policy, then this is how monetary policy works. You adjust. If you see inflation, you increase rates, or if the inflation spirals crazy, then you default. But, nobody wants that. Anyway, long story short, for now, I would say this way, that looking at the picture here, and if we're not going to get a move today, for example, let's say to the all-time high for the Dow Jones Industrial Average, then I would say that maybe we could just stall up until next week, Wednesday. That's when the interest rate decision by the Fed is coming out. So maybe we'll stall there, like move sideways and stuff like that, form something like a range here, a little small range, and then we could pop higher, on Wednesday or something like that. But for now, let's see what's going to happen. We know that the Federal Reserve and the Powell is getting intimidated by the White House administration. If you didn't see the recent video, honestly, go online and just put in, on YouTube or something, put Powell, Trump, and this put in the two names, and you'll see the most recent kind of interaction. And honestly, heads down to Powell. I think it was a correct way of approaching the situation. And anyway, but that's only my opinion. Let's see how the market reacts to all this today. The S&P 500, so another all-time high. Look at this. I'm looking at the cash index, by the way. So the cash index today reached a new all-time high. So basically before market hours, the S&P reached a new all-time high. And look, I said to you before, I'm gonna stick to the upside for now on this one. Eventually it will be an interesting moment to short this one, but we need some sort of a catalyst in a way. For now, we're just kind of watching the situation. We're carefully monitoring the situation. My next target from the upside is the 61.8% on the Fibonacci extension, which is drawn from the lowest point of October of 2022 to the highest point of February of 2025, and then to the lowest point of April of 2025. So this one, some of you might say, but hey, what about, like, why not to draw it from here or something like, or here? Look, this I'm measuring at this point. I'm measuring these like the real reversals of kind of strong reversals of the trend, so we had a reversal here, we rallied all the way to, for 2 years, kind of we're rallying here, almost a year and a half actually, to the February point here, and then we started selling off. In April it was a clear drop here, tariffs were introduced, and then or I should say the big carton board was introduced with numbers and countries and numbers next to them, then we kind of reversed all that, and they said that they're not going to do that straight away, and there we go, boom, we rallied up again. So I think at the moment everything is on the right track, and at the moment everything is just kind of okay still. But yeah, I'm leaning towards the upsides now on this one. 61.8, around the 6,439 zone-ish. That's my target for now. The NASDAQ 100 also reached a new all-time high today, but look at this. We reached a new all-time high, but we struggled to remain above this barrier, above the Monday's high. And I'm keeping that level here on the chart, this 23,261 on the cash index. I'm keeping this line for now, although, like I said, we violated it. But what we're seeing, why I'm liking it, is because we're struggling to remain above that hurdle. And so if we can stay above that hurdle, I will go for some higher levels if we do stay above that. If we don't stay above that area, then maybe a little bit of a retracement back down here could be possible. Look, don't forget that we're in the earnings season still. This week we had major companies. We had Tesla coming out, with the earnings, but the sales dropped drastically in there. They seem to have good numbers, but the sales did drop significantly. So yeah, so we had a bunch of companies. Coca-Cola came out, good numbers. Let me just double check. On Tuesday that came out, Coca-Cola had some good numbers, but still declined. It seemed like Google. Let me just go. Google was, I think, not bad. Yeah, not bad. But then yesterday it started selling off. So it seems like the market is still worried about the current situation, what's going to happen with the Fed, and with the trade talks. So it's unclear because the deadline is coming closer. Look, the 1st of August, that's the deadline, right? However, with China, they have a new deadline now, August 12th of August. And I think, look, I'm not saying anything. I think the can will get kicked further, in my opinion, because I don't know. With the European Union, now the big question is the European Union. So, and I think Australia is suddenly getting into this whole kind of picture, but quietly, very quietly, because I think that they have agreed on something, if I'm not mistaken, if I read correctly, that they have agreed on a few things. So Australia will be importing US beef. Australia is one of the top exporters of beef, but hey, look, I don't know how they will go around this, but you'll have a price drop probably in beef, and I think that some Australian producers will have difficulty to compete. So this is where, you know, you're trying to kind of do the US is trying to do the maybe the what China is doing or something, like, you know, like you're trying to oversaturate the market with goods which are a little bit cheaper. Not saying anything, but I doubt that the US beef, I mean, okay, this is a very debatable thing here, but not all US beef is kind of good quality, and you know, because of the standards that they need to meet. In general, in the US, the standards, the food quality standards are much lower than, let's say, in Europe, or, you know, or maybe in Australia. So yeah, then going into other companies. Oh, by the way, the one that I mentioned, Tesla. Yes, of course, Tesla. This was a massive drop. Look at this. I mean, boom! Look at this drop. Let me just quickly measure the move here from this area to this area. Around like 8.5% we dropped initially, but okay, around 8% we lost on this. Okay, it will recover at some point, but the 300 level, to be honest, is becoming the one that we're watching carefully, and also want to see if this upside line here is going to hold, because if it's going to fail, if we're going to drop and stay below this upside line drawn from the low of the 5th of June, then yes, lower levels here could be met. Look, so yeah, that's the situation here right now. By the way, NVIDIA, let's have a look at this one. Oh, yeah, rallying AMD as well. AMD is pushing, yeah, to new all-time highs. Sorry, not new all-time highs. All-time highs are here. NVIDIA is the one that is trying to get back to new all-time highs. Let's see if they succeed or not. Let's jump into the US dollar, ladies and gentlemen. So the US dollar this week has been, I would say, struggling, and I talked about this during my videos, during my webinars, that if we do drop below this $97 mark, and we stay below it, I'm going to get a little bit more bearish with the downside. Well, we did get that drop and we stayed, but then we kind of reversed back up a little bit. So in a way, I would say this didn't really work out. So the level, the zone here is somewhat working out. If you want to stick to the zone, I think this would be a little bit more correct. But if the level didn't really work out very well. So have to say that, have to admit. But if we do again drop below this whole highlighted territory, then yes, I'm going to lean further. I'm going to lean further towards the downside, and my next target will be the 96 territory, somewhere around here, and then we'll go from there. This is what I'm going to do. This is what I'm going to aim for. So let's see what's going to happen here. For now, what I'm looking at here is the 98. For the upside, I'm looking at the 50-day EMA. If we can clear that, wonderful. I'm going to go for some higher areas, and then we'll take it from there. For the downside, like I said, yes, if we do drop and stay below the 97 territory, then yes, I'm going to lean a little bit more towards some lower areas. Let's jump into the German index DAX. By the way, economic data today from the US. Do we have anything major? Durable goods, that's kind of it. So we're watching. I think that's going to be somewhat of a quiet day, unless we could get some sort of earnings, but no, not really. No, we are not going to get some earnings there, and we're not getting major. Next week we're watching. Let me just have a look at this one. Yeah, next week we're watching some earnings, and then we have some big companies coming out. Let me just show you what I'm talking about. So let's mark this by market cap. Waste Management, Monday, Waste Management, yep, Nucor Corporation. So these companies are coming out. Tuesday, Visa, Procter & Gamble, Merck, Boeing companies. So yes, the Starbucks, Spotify, these guys are coming out. Then on Wednesday, we are getting the Microsoft, Meta, Qualcomm. So yes, some of the other big names, Robinhood is coming out. So this is a very popular stock. And Robinhood lately has been crushing it, honestly. Like, it is just enjoying the whole crypto rally as well. And look at this, all-time highs. We have reached all-time highs on Friday, and since then we retraced back down. But to be honest, look, the earnings are coming up, so we're gonna see what's gonna happen there. If we're gonna get some sort of, if they're gonna meet their expectations, or we're gonna do good. If we're gonna do good, then hey, great. We could see a reversal back up. But again, to be honest, lately I think that even if we get some good numbers, I think the market sometimes, if it finds something to pick up on, they're just gonna, the stock drops and doesn't care about the good numbers or bad numbers. It just like freaking drops and stuff like that, Anyway, German DAX. Look, this one is an interesting one. On Wednesday, we had a strong rally here. I mean, at some point it was like, it looked that we're going to go lower, but then we rallied, we broke this downside line. We came closer to creating a new all-time high, but failed to reach the current all-time high, and then kind of reversed back down. At the moment, I would say this way, that if you're looking for some higher areas, then 24,644 zone is the one to watch. If we can clear that, I will go to the upside. For the downside, well, I would prefer to wait for a drop maybe below the 23,922 zone right here. If we can get that drop, and we can get a drop below the 50-day EMA, I will get a little bit more excited with the downside. So that's my kind of game plan here for the German index. Very quickly on the S&P 500. Oh, by the way, almost forgot. ECB. ECB yesterday came out with no action. Yesterday we saw the ECB just coming out, saying like, look, we are keeping the rate unchanged at 2.15. There we go. And yeah, but we're kind of ready to act if needed. So basically we're rain data dependent. So the tone that you kind of got from Lagarde was kind of the, they're not really considering, what's the word? They're still considering a possible cut if needed, if we need to support the stock market. So look, the market kind of took it maybe as a bit of a negative in a way, saying that, thinking that, so that means that not everything is great with the market, with the European market. Well, we can see that at this point, probably not. But anyway, look, long story short, for now, just to be a little bit more on the safe side, I think that this is the better option here to do. And if we do drop below the 23,922 zone, then yes, great. We'll consider some lower levels. A drop below the 50-day EMA could be a nice one here as well. So yeah, long story short, if you're looking for some higher levels, just wait for a clearance of the current all-time high. I think this is the easiest way right now, the simplest way to consider the next short-term directional move. Let's jump into the FTSE 100, and then we'll shift to the Forex world. But look, the FTSE 100 is retracing back down, so I'll say it this way: as long as we stay above this area, above this 9,000 zone somewhere, I'm going to continue targeting the upside. Did we get some data this morning? Yes, retail sales came out from UK. Much better than the previous, and okay, not better than the forecast. Maybe the forecast was a little bit way too much, but yeah, much better than the previous. So good. The market is seeing this as a little bit of a negative. However, I think the FTSE is maybe reacting a little bit more towards the general global situation in the market. Now then, jumping into the Forex world, ladies and gentlemen, very quickly, AUDUSD, fantastic movement. Look at this. I mean, I talked about this idea of testing the upper side of this rising wedge pattern. It's not a channel, it's a rising wedge. And now we're seeing a little bit of a retracement. Look, what I said to you before, that in general, rising wedges tend to break to the downside. However, in this case, the prevailing trend is to the upside. So it's kind of moving sideways here, moving to the upside sideways. And what we're seeing here right now is that if we do get a clearance of the upper side, then yes, great, more buyers could join in. For now, if we can get that clearance of the upper side here, wonderful, I'll consider some higher levels. But at the moment, while we remain inside the pattern, we could still drift back down. We can still move a little bit lower here. And then yes, maybe we could retest again this lower side of this rising wedge pattern, because it also nicely coincides with the 50-day EMA, which could provide additional support. AUDJPY, very quickly, just have a quick glance. So far so good, rebounded from this upside line, approaching this 97.32 area again. If we can get a nice clearance of down, I'll go to the upside. NZD/USD is at an interesting spot here as well. 0.6048 is something that I'm watching here. If we get a nice clearance of this one, I'll go to the upside. That's kind of it on this one, to be honest. I mean, for the downside on this one, what can I say? A drop back below, okay. I think this is wrong. I think this is wrong, and I think that this should be used somewhere else, maybe actually somewhere around here even. But if we do fall back below the 50-day EMA, then yes, I'll consider a move lower, but only up until this upside line right here. This upside line is taken from the low of the 12th of May, or should I say the lowest point of May, and I think it's a good one here. It also coincides nicely with the 200-day EMA, and then we'll just kind of go from there. NZDJPY, also one of my favorite ones. Look at this beautiful movement here, beautiful test of this 88.89 zone. We tested it, we drifted back down, so it's still, we're kind of stuck here above this upside line, which is, to be honest, a little bit on the tentative side even. I think even we can get rid of it and just kind of fix our attention on a possible range, here. So let me just adjust this very quickly. So what I'm talking about is this, and oh, no, like this. Let me just grab it this way, up and up. There we go. So we're kind of in a range here right now, or actually, what, maybe I think it could be drawn somewhere here. There we go. So we're kind of in this range, and I think that it's best to wait for a drop or a clearance through one of the sides of that range, either through the 88.89 in order to consider higher levels, or maybe wait for a drop below the 87.54 zone here somewhere, and a drop below all these EMAs on the daily chart. So this way more sellers here could join in. Let's jump into USDJPY. So of course everybody's watching USDJPY as well, because the US dollar is on the weaker side. Japanese yen is going under some changes in the government, and also it seems like the Japanese yen could pick up interest if the stock market starts reversing to the downside, and Japanese yen could pick up interest. So being a safe haven. Look, overall, I would say this way: if you're not comfortable with the position of USDJPY right now where it is, I'm not blaming you, because it's stuck in between my EMAs here, and it's stuck between my EMAs, and basically for now it's like I said, probably the better option is to just observe it. If we start popping above the 200-day EMA, then great, I'll consider some higher levels. If we do fall below the 50-day EMA, I'll consider some lower areas. USDCAD. Now I talked about this yesterday, and I threw out a little piece here on our channel, on our trading view channel, and here you can check it out basically. So it was near this upside line, and it was rebounding from it, but I was saying that, look, for the downside, if we clear the upside line and we clear the 1.3539 zone, I am leaning a little bit more towards the downside. Yes, we're having a nice rebound right now. That's absolutely fine, but for me, the upside scenario would be best at on a break of the 50-day EMA. This way, at least more buyers could join in, so they could see this as a little positive moment. But again, we should not be very, very bullish then, because look, we had breaks above the 50-day EMA, and some of them kind of were working initially, but then failed to work at the end. So just keep that in mind. USDCHF, as always, this copy of the TXY, basically, it's still bearish. I'm still bearish on it, and I think that the better option right now is to wait for a drop wait for a drop below the 0.7871 zone here. If we can get that move here, if we can get that drop below this hurdle, then a forthcoming lower low will be confirmed. For the upside, I think a better option here is to wait for a push of a 0.8038, and then we'll take it from there. EURUSD, EURUSD, yep. Good move here, good move to the upside. Yesterday we got the ECB, so their inaction kind of has been seen as a somewhat of a positive one initially, because initially we were selling off and then kind of it stabilized and we pushed back up. So looking at this, I'm redrawing this upside line here because I think it should be somewhat this way, and could be a nice case here. If we do rebound from this upside line, then wonderful. I will go higher. I'll go towards my 1.1830 zone. But if we start falling below the upside line, below the 1.1721, I will consider a little bit of a move to the downside, and then we'll take it from there. So long story short, ladies and gentlemen, if you're looking for some higher levels, you have full kind of justification to aim for those higher levels because we're still above the upside line. But if we start breaking it, then yes, I'm going to consider a little bit of a move to the downside. EUROJPY, there we go, beautiful pop here. Look at this. I talked about this little range here, 171.80 on the downside and the 172.91 on the upside. Now again, very subjective levels, I would say, but look, so far we were having breakouts, but we were struggling to remain above or below those levels respectively, and that's why we're getting this breakout now, this 172.91. Let's see if we can stay above it. If we can stay, that's great. More buyers could join in, and then we'll take it from there. Finally, GBPUSD very quickly. So we're drifting back down on this one, and we're resting on the 50-day EMA. Let's see if we can drop below it. If we can drop below it, then I'm going to consider a little bit of a retracement towards this little area right here, the 1.3370, which has been a good area of support lately. If we can clear that area, yes, further declines are possible. Let's jump into the commodity world, ladies and gentlemen. Gold, look at this beautiful retracement after testing the upper side of this broader ascending triangle pattern. Now, this idea, the smaller ascending triangle pattern, worked out beautifully. We broke the upside here on Monday. We broke the barrier and we traveled higher. I said to you that I'm going to target the 3,430.40 zone. There we go. We reached it. Now we're drifting back down. It seems like we can get rid of the purple thing. Actually, you know what? We can reuse it. You know what? Let's reuse it on the bigger picture here. I think that would be swell. And we can do something like this. Now again, it's a rough sketch. It's a bit of a rough sketch. So yep, just kind of keep this in mind. So this is what I am talking about. And look, why is it like this? Actually, you know what? Let me just redraw this. I mean, it's sometimes better just to redraw. I mean, I don't know why is it like I didn't like it. Yeah, this is what I wanted. It's not dragging anymore. Right. Okay. Interesting. But anyway, you know what I'm talking about, right? Is there anything else that I can do here? No. I would actually prefer just a simple triangle. But okay, maybe we should do it something like this in order to something, maybe let's do it this way. Maybe this way will work. Anyway, ladies and gentlemen, look, we have ourselves a triangle pattern, right? You know what, I'm gonna get rid of it. It's annoying me around here. But you see what I'm talking about. We have ourselves an ascending triangle pattern, a big one. I talked about it, I mentioned it. So now we're seeing, after we tested the upper side of it, we're drifting back down. Look, although the smaller triangle here, the smaller ascending triangle worked out here, and we had a nice blast here, that doesn't mean that the bigger should work out as well, because if we're struggling again for the fourth time to clear this 3,430.40 zone, and we're drifting back down. So in a way, that's kind of raising a few concerns. So I think that we could see further declines here. I want to use this line for today and mark yesterday's low. Yesterday's low is around the 3,351 zone, somewhere here. If we fall below it, I'm leaning towards the downside, ladies and gentlemen, because again, at the moment, if we do fall and stay below this 3,351 zone, yes, there is a chance for this one to drift further south towards to retest these the lower side here of the of this bigger triangle pattern. Let me just get rid of one of the lines here just to kind of make it simple. So yeah, we could test this, we can break the upside line, and we could travel towards the 50-day EMA, which lately has been acting as a fantastic area of support. You can see yourself here. So, why not to consider that? At the moment, we're seeing a slide as we speak. And yeah, maybe we'll get that clearance later on eventually. But again, I'm only watching this upside line here, and then we'll go from there. Silver is stuck. Silver, it did fall back below the 31.12 zone right there. So yeah, we have fallen back below it, and hey, for now, I would say this way that I'm looking at the downside scenario, and I'm looking at the downside scenario only if we continue to trade below this 39.12 territory. If we do that, then yes, I think we could see a little bit of a retracement back down. Palladium, similar story, nice decline here, but still remain above the 1,250 zone. I talked about this. I said that this is my barrier for, it was a barrier for the upside, which we broke and went higher. Now it's the barrier for the downside. Let's see. But even then, we have a bunch of upside lines here, tentative upside lines, which kind of are in the way, and for now, it's a tricky moment here. So let's not rush into conclusion, okay? First of all, we're watching this 1,250 zone. If we stay above it, then yes, a nice rebound here could be possible. Platinum is also retracing back down. We fell back below the 1,446 territory, so in a way that could be seen somewhat as a bearish moment. Copper slowed down. We went for a new high for this year, and there we go, 5.89. Actually, I think it's an all-time high. We went for a new all-time high this year, this week, and cleared the 5.89, the previous one, and retraced back below it. So on a weekly chart, now that's where the interesting bit, happens, because on the weekly chart, you can see that we created a false breakout on the weekly candle. So in a way, if we stay below that hurdle, below that previous all-time high, then yes, there could be a bit of a chance here for something like this. Right, so let's see. Yeah, WTI oil. WTI oil is a very interesting moment. At a very interesting moment here, a very interesting spot. I talked about the $65 mark. I said that I'm going to be bearish if we do clear this whole zone. Let me tidy up the chart here a little bit. Way too many lines, and I think that some need to go here. I think something like this needs to be drawn. No, I think that's already too much. You know what? I think that in general, this is what I'm going to be looking at. The 64.76 here. In general, yes, the $65 mark. I think it's still a better option to keep an eye on. Look, long story short, for now we're stalling. Slightly below the 66.43 territory right here. If we continue to stay below all the EMAs as well, I'm still bearish, ladies and gentlemen. I'm still bearish, and I'm still sticking to my game plan here that if we do fall below the $65 mark, I'm going to lean towards the downside. Natural Natural gas is at a very interesting spot here near the psychological 3 level. If we do clear that level, I'm going to go lower. This idea worked out. I said to you that if we do fall below the 200-day EMA, I'm going to go lower. Now the next area is this one. So we're going to be very carefully monitoring the this psychological 3 zone. If we can get a nice clearance of that one, I am leaning towards the downside, ladies and gentlemen. Coffee, very quickly on coffee. Yes, rebounding nicely here, back up, but I need a clearance of the 313 zone. Cocoa, right, this is what I threw out yesterday in my on the channel here on TradingView about cocoa, that we were testing the upper side here, you know. We're testing the key resistance area, and I said that, look, if we do clear it and we draw and we stay above it, I'm going to go higher. But if we don't, then we're still within the falling channel. In general, while we remain inside the pattern, until we clear one of the sides of that pattern, we have to accept the fact that it could still remain, you know, trading inside that pattern. If it's a falling channel in this case, we could still see it drifting lower. However, for me to get comfortable with the downside at this point, a drop below this highlighted zone would be needed. That's what I need, and then I'll take it from there. Wheat, very quickly, let's have a look. Nothing major happening here. I'm still going to look. I'm still going to pick up on wheat just to see what's happening. We're currently oscillating around the EM and EMAs here. For some, maybe that they're seeing this as an opportunity. For some, maybe it's a little bit on the boring side. Well, you decide which front are you on. Sugar, now this is interesting. I like it. It rebounded from my almost $16 mark, so great. Look, this is the $16 mark. Is if we do drop below it, then yes, I'm gonna lean towards the downside. For the upside, I would like to see a push above the 16.79 area. If we can get that move, we can get that push above the 16.79 and the 50-day EMA, then yes, great. I'll go to some higher areas. Cotton, very quickly on cotton, we're oscillating around the 200-day EMA, so not much is happening here, to be honest, so that's why this arrow can go. But we can keep an eye on this 69 territory right there somewhere. You know, if we start popping above it, then maybe there could be, you know, it could be a gateway to some higher levels. And ladies and gentlemen, for dessert, to finish off this long session, sorry that it takes so much time, but again, there's so much to kind of wrap up with this week. So yes, you know, it's you want to mention everything. You don't want to miss out anything. Bitcoin, look at this. Boom, there we go. This is what I was talking about. This is what I was mentioning in my crypto update recently. And honestly, if you've watched this, I mean, I talked about it. There we go. The crypto update, I did it yesterday, and so far, so good. I said to everybody, look, the fact that we had this hype going into signing the 3 acts, which will, you know, regulate the crypto world, that was seen as a positive. Everybody was like, oh my God, great, great, great. But I said to everybody, like, look, that sounds like a bit of a, you know, buy the rumor, sell the news moment. And, you know, we had something similar here back in January. There we go. We had a moment here, and when the U.S. president was inaugurated, and then everybody was promised that he's going to mention something. Well, everybody kind of hoped, nobody promised, but everybody was hoping that, you know, he's going to mention something crypto related during the inauguration, and there we go, boom. He didn't mention anything, and the crypto drifted nicely to the downside. There we go. So we traveled lower. We, you know, at that point we kind of found support near this 75,000 mark from where we rallied. Lately we rallied because of the 3 acts they were saying. But what I was saying that as well in the video here, that look, and I've also mentioned that, by the way, in my morning Markets Talk webinars on Monday and Wednesday, I said that cryptos might be losing their appeal. And where was that, which I threw out this idea? Will cryptos lose their appeal as more regulation comes in? This is what I was talking about. Look at this. I mean, this is July 22nd, and I was mentioning this to everybody that they might be losing their appeal, because the whole point of the cryptos was that they were unregulated, and now you're regulating it. So anyway, that's why, like I said, it's now, of course, somebody might say that, oh, but it's a nice product, now it's regulated, we can invest into it more safely. Yeah, now it became like just a regular a regular asset, so okay, it has, yes, of course, some benefits and all that. That's true, but in general, it's losing its essence, and it's losing its like attractiveness in a way, for now, maybe. But look, maybe it will pick up again. Don't get me wrong, big institutions are pouring money into it, and whenever you see big institutions going in, suddenly, like I said, it becomes this, this thing that nobody wants anymore. And yeah, it's like it's a tricky moment then. Anyway, long story short, for now, I'm watching this. I'm quite happy with the technical setup because it's working out. We got my breakout of the upside line. We got my breakout of the 116 zone. Let's see if we can stay below it, and if it's not going to end up being something like a false breakout. If it stays as a false breakout, then maybe there's a potential for some upside. But if it actually stays below the 116 zone, then, well, I'm leaning towards the 112 zone, the one that we broke out earlier. Talked about it, so let's see what's going to happen here. Bitcoin Cash. Now, Bitcoin Cash is a little different animal, honestly. It was declining. I don't know if it's Bitcoin that's lagging, or is it Bitcoin Cash that's lagging. Maybe Bitcoin is lagging, because Bitcoin Cash right now is pushing back up. It's forming something of either a rising channel or a rising wedge. Either way, if you're looking for some lower levels, a break through the lower side of it is needed here. A break below the 50-day EMA, yep, would do the trick for a few more sellers. Ethereum is stalling, and we're starting to move sideways, maybe forming something of a triangle pattern. If that's the case, then it's a bullish case. Because we had a strong rally first, then we triangle, and then the greater chance for this one to break out is to the upside. But again, a confirmation break is needed. Ripple is holding nicely above that psychological 3 level. It tested it yesterday, and we're still above it. So if we continue to trade above that psychological 3 level, a nice rebound could be possible. Litecoin drifting back down a little bit, held nicely below this downside line, but still this 106.60 is the one that I'm watching very carefully. So we remain above it. If we fall below it, I'm leaning towards the downside. Dogecoin, I talked about this yesterday and said that if we do fall below that 38, what? Yeah, sorry, I looked at the numbers. I thought, why there? 38.2. If we look at the 38.2, I said that if we do drop below it, I'm going to lean towards the 50 and then the 61.8 on the Fibonacci retracement. There we go. Polkadot, beautiful retracement, beautiful move back down. I talked about it as well, and basically we have retraced the 50%. That's in a way great. Let's see if we can test this upside line. Taken from, and this upside line has to be drawn probably somewhere like this, and for now, yes, and then we'll see what happens next. So if we do break the upside line, and there, guess what, lower levels could be met here. And finally, Tron is beautifully rebounding back above this upside line, and after testing the area slightly below the psychological 0.30 zone, we're pushing back up. However, I said to you that I'm going to go for some higher levels if we do push back above the 0.32 territory somewhere around here. Then I'll start considering some higher levels again. Ladies and gentlemen, that is a wrap for this week. Thank you very much for watching and listening. I really appreciate your time. Sorry for going a little bit overboard with this webinar, but I had a lot to say, and there's a lot of things happening, of course, but thank you. Thank you, everybody. I hope you'll have a beautiful weekend, a beautiful trading day today, and then a beautiful weekend, and you'll all come back nice and refreshed into the markets on Monday. And yeah, it's going to be the last week of July, so we'll see what's happening. It's going to be the last kind of week up until that 1st of August deadline, the tariff deadline, so we could see increased volatility And we have the Fed as well. We have the BOJs. And it's like, yes, it's going to be, I think, another crazy week. So prepare yourselves. That's why rest as much as possible and come back fresh on Monday. Ladies and gentlemen, as always, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade and everything will be fine. And I'll see you on Monday. Bye for now.